Hopefully everybody's doing good this morning. That little University of Michigan had a pretty good rocker today, for whatever reason. Hopefully everybody's doing good this morning. That little University of Michigan had a pretty good rocker today, for whatever reason. Hopefully everybody's doing good this morning. Muted. There we go. All right. So today is simply a question and answer. We're not normally here on Friday. And you can see that the market either rocks with the announcement or it just goes to sleep. As you see, it's just going to sleep. And except for the announcement this morning where we had a big rock and roll move to the upside, and that's most likely it. Also, why would that be it? Because traders are going to exit the market, arena today, right? That's why, because crazy people fly planes into boats, into buildings. And so that's why, everybody gets flat, right? All right, so it'll be a short meeting if we don't have any questions. So feel free to ask your questions, especially newbies in here. There are no dumb questions. Don't feel like, oh, that's a stupid question, I don't want to answer that. Everybody think I'm crazy. No, nobody will think that. Everybody in here, who's our regulars in here, like Abdul and them, they Robert, Scott, they were all beginners at one time also. So they'll all remember that. So ask your questions. I'm going to answer them if I can. You can see we're in a big, huge pennant now. Right there, right? Now, typically that means we're still going up. If you came up like this, you're coming out like that, right? So you have to memorize your chart patterns. Let me go to it real quick here. Get a browser window. Oh. So chart patterns, right? You can see it right here. See, you come in going up, you come out going up. You come in going down, you go out going down, right? So we came in going up, we should go out. That's it, right? Does it work 100% of the time? No, it doesn't. But it works enough to be statistically probable. And so you can anticipate. And part of our job is to anticipate the market. Now, in the beginning, when you don't know what you're doing, you don't understand price action, you don't understand that sort of stuff, that it's virtually impossible to anticipate the market because you don't understand the market. And that's the whole point of learning to trade, is not learning how to trade. It's learning the market so that you will, the natural response is you'll know how to trade, right? So everything's herd mentality, right? This is the dollar, you can see that, but I can flip over here to, like Bitcoin right here, all right? So you'll see Bitcoin, what do? They do the exact same thing because herd mentality does this kind of stuff, right? That's what happens, right? And then you go to S&P 500, if I didn't tell you that was the S&P 500, you'd think it was any currency you ever looked at, all right? Looks just the same, all right? So there you go. So anyway, any questions from anybody? Anybody? Could be a question about Fast Track. It could be remember, we only do this a couple times a year. So if you miss this one, it may be in October before we do it again, right? Think of the time you'll miss, right? And pull up Bitcoin again, sure. You want full screen, Scott? Okay, there you go. Where was I at? It's a chunk of money, huh? We understand that. It's a chunk of money for several reasons. One of them is it took us hundreds of thousands of dollars to learn how to do it ourselves, to gather the information. It took a lot of money for us to do that. All right, and that's one way to get it all at once. We call it Fast Track because we're going to fast track you into because we're going to collapse the time frame it takes for you to get the information you need to know to become a trader. All right. Now, that's not always right for everybody, and that's why we have a bronze membership where you can come in just like you've been coming in. Right. So you've been here for a couple of weeks now, and this is what we do every day. And you say, "Wow, that would really help me." All right. So basically, you're working your way into learning how the market works. Right. So, and the charts are absolutely amazing. They will help you like you've never been helped before. All right. So it's unbelievable. Florida is the best place. Not Florida, excuse me. Hawaii, JT. At Hawaii, you can trade the London every day at about 11 o'clock at night, right? So that means you could spend all day on the beach, go in, have dinner. In other words, you could live a normal life, and instead of going to bed at 10 o'clock, you go to bed at 2 o'clock in the morning, and then you wake up late in the morning. It's fantastic. I've traded from there, and I loved it. Because other than that, it's hard to trade to London because it messes with your biorhythm. I did it for 3 years. It was really hard. And it does mess with your biorhythms. If you live in the United States and you got to get up at 2 o'clock every morning and go trade for 3 hours, and then I'd go back to bed, right? Then wake up in a couple hours and trade to New York. It was hard, real hard, you know. So well, you can trade from anywhere. A lot of people like Abu Dhabi too. They like to be in Abu Dhabi. Yeah, they're the Aussie dollar. They're the New Zealand dollar. They're the Aussie New Zealand, and they are the Euro pound. Now, that being said, those are the best currencies for trade. But right now, they are all the lowest ATR. That's because they are the lowest ATR. So see, ATR is a measure of volatility, Edward. All right. So the higher the number is, the more volatile the currency. All right. Now, as a beginner, do I really want to jump into something that's really volatile? No, I want to learn slow and in a currency that'll just chug along a little bit. And that's the lower ATRs. But right now, for instance, Aussie New Zealand only has a 46 pip ATR, right? Aussie dollar is 57 pips, see? You can trade all the markets you want, Yuli, right? You can trade all the markets you want, but the purest market is the London market, right? So that'd be the best time in the world to trade. You're fortunate to live in a place where you can trade that. Yeah, absolutely. So anyway, so that's what they are. But let's take a look at it, for instance. Okay, here's the New Zealand dollar. Put this down for a minute. It's just going flat right there. But when it does get some moves, it's all flat. But when you get over in here, see that it pulls back about 20 pips, pulls back about 10 pips, pulls back about 10 pips, pulls back about 10 pips, but continues to move to the downside. Well, see, every one of those, especially these wide open spaces, is your opportunity, right? So you can see those wide open spaces there pretty easily. And so let me pull my drawer up here. All right, so, there's a beauty right there. You don't want to miss that one. See how big that is? There's another opportunity here, see? So you're welcome. All right. Está un buen pregunta, Yuri. Spanish back to you. All right, so you see, that's why you want to trade it. Little pullback, go again. Little pullback, go again. All right, now, because it's only got a low ATR, it isn't going to go very far. All right. And by the way, we netted with 315 pips this week while you were here in the room. That's it. And if you were to go try to make 315 pips in a week, trading 5 to 8 pips, it would take you 60 plus pips, 60 trades in a row to equal that 315 pips. All right. Can you do 60 trades in a row without a loss? Pretty hard to do. Pretty hard to do. I've done it, but it's pretty hard to do. So it should be pretty clear. I got to have a paradigm shift. I have to shift the way I think about the market. I can't be just running in there and grabbing a couple of pips and coming out, because that's actually I'm actually hurting myself. I've set myself up for failure if I do that. And you don't want to do that. It's just that simple. All right. All right. Any other questions? It's going to be a short meeting if we don't get some questions here. Anybody? Trading questions? Any kind of question you want. Confirmer. Okay. It's a brand new addition. It's only well, we've been playing with it for a while, but it's only been added to the charts. Okay. So the video totally on there, and Scott, but as you see, it's totally different here. All right. And of course, we know we have a T3 in here. T3 is it's a type of moving averages. All right. So, but it's called a T3. All right. Which is a trending one. And so it has the ability to program it that if you get a certain slope, all right, and you've broken support, then you're most likely trending. And if that's the case, it pops an arrow in there, right? And so, you know, you look at a chart right here, there's no angle here, nothing happening. And finally, we get an angle here that says that's a trending angle. That's when you get the dot, all right? And it's telling you we were trying to go up. Are they still trying to go up? Well, this morning they can't, because we had a announcement that was dollar positive. See, so dollar positive means that dollar is going to go up, which means New Zealand has to go the opposite way. So, you know, just because something tells you something, there are other factors that can stop it. Right? Now, if you're going to use the confirmer, you only use it after you're in a trade. So you would take your trade like you normally do on a regular chart. All right. Then you get your second trade in. All right. Now is when you start checking the confirmer. All right. Because you want to make sure that you stay in for the whole ride. All right. And the confirmer will keep you in there. All right. So, so the way that works is, all right, is as long as there's no wicks on the opposing side of the candle, you do not have a 50% retracement, because each candle, new candle that forms halfway up the body of the previous candle. That's what Heiken-Ishi does, right? So as long as you don't have, that means halfway up means you don't have a 50% retracement, right? But when you get down here, the candles are getting smaller and smaller and smaller. And see, now it doesn't take much to do a 50% retracement. You move your stop, and you get stopped out, but you get stopped out with profit. No, it can't be paid. There's a lot of work. It's got to be done every day, and it can't be bought separately. No. So it's not available. It's available, but right now it is on special. So it's, you know, less than $1 a day, and it's I know it's worth more than $1 a day, right? So you can subscribe and get it. Right? The special for fast track, well, normally it's $5,000 if you go look at it here. Let me go, hold on, where's my home page? Oh, hope that you have this open all the way. All right. Membership, so it's the gold membership, right? So this is the price, $5,000, right? But with that first 25 people who take advantage of it, we're discounting it $2,000. That's a big discount, $2,000 bucks. All right. So it tells you everything you get, blah, 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 blah. And we include 2 months of charts at the bronze level for you. That's a $600 value right there. And then at the third month, you go month to month as the bronze level. But you're a fast tracker. And by the way, you're a fast tracker for life. All right. So you can always come back. We have traders who we're going to do it next week. We'll have, you know, 8 or 10 fast trackers who are professional traders now. They're not in the room with us anymore. They're professional traders, but they'll most likely come back just for a refresher. Right. So yeah, somebody can start with movement charts, and that's $300 a month. Right. So it includes the charts and the live room, right? So there you go. to get, yeah, as long as you got all your software down and all that kind of stuff, John, right? Then you might want to take, make sure you understand how the software works. Okay, so go to software and tutorials, and go down there so you understand what the HMI does right here. That why is that important? All right, I don't spend a lot of time on it, but I look at it every day. Why is that important? Why are those important? Those are the things that you need to understand, because they're tweaks to help your trading, what they are. So, and you can always watch any video you want in the first videos page. There you go. Okay, good. So yeah, John's already signed up as our first fast tracker for this group right there. Sure, it's a valid reason. Yeah. Yeah, unfortunately, Erica, I understand. And, but, it costs a lot of money for us to run a company. A lot of stuff behind the scenes that we got to have redundant servers and, all kinds of stuff. So, basically, we haven't raised, we actually did raise prices this year, but we haven't raised prices since 2005. But yeah, a lot of traders do start, and that's what they work their way up. All right. There's also an option that it's a lower cost one, which is the silver on the website. Obviously, you can go see that. But silver is fast track light, right? And it's basically and it's a one-time payment, right? And you do it self-directed, and you keep your own charts. You don't have to buy charts or anything like that, right? Nothing like that. But you don't get the room and all that. So it's all about where you are in your journey. All right. For some people that works absolutely perfectly. All right. For other people, they need a little more handhold. Other people, being in the room is really all they need. Right. So, yeah. All right, Scott, no idea how many times I've done the fire hose. That's what the fast trackers call fast track masterclass. The fire hose is like drinking from a fire hydrant because there's just so much information. You're lucky if you get 30%. But the good news is we record them as separate lessons, and then you go back and you can watch them one at a time. Stop it when you go, wait a minute, let me think about that. Stop the video. Let me think about that for a second. Let me look at that in the chart. You just do all that. That's the beauty of it. And you can come back. You never pay for it again. Every time we have it live, as long as you're a subscriber, you can go through the fast track again, right? So we'll have 50 people going through fast track next week, right? No more. So, all right. Anybody else? Trading question? How about a trading question? What do you got your life? Everything's just going sideways, folks. It's done for the week. It's why we don't trade on Friday. There you go, Erica. That's a message to you from JT. Anybody else? Nobody? Let me show you how to do that. Great. There's Jerry. I'll answer that just as soon as Jerry finishes his blah, blah, blah. I mean, talking.
Hey, I don't have much. I was just checking. It's Friday. It's the last day of the free trial, the free open doors. So I wanted to make sure everybody was in and having a good day. Naturally, it's a Friday, and look how the market's doing. We are good to teach people to stay sidelined. Even if you got your fishing pole, you don't have to throw a hook in the water every day. You guys need to learn the weight trade, hardest trade in the world to learn, an easy one to master. Just leave your dealing station closed. Just watch, learn, paper trade. I'm here, I'm around. I hope people are serious. Anybody that's been looking that wants to join in, you need to make a decision. Life doesn't change by staying the same. So y'all be blessed. Have a great continuation of the training right now with Scott. and have a great weekend. If y'all need something, you let me know. Support at proacttraders.com. God bless.
Okay, thanks, Jerry. All right, so ATR, all right, Edward. The New York fix is when the ATR happens. It starts at New York fix. It's actually the close and the open of the 5 o'clock candle in New York time, right? So when I'm always here at 4 o'clock, so I'm here to grab it right when it happens, so I know exactly where it is. All right, but if after that it puts a low in, then you use the low, because the ATR is going to be nothing more than the day chart candle by tomorrow 5 o'clock, but it's today. In other words, it's anticipating what the candle will look like tomorrow, even though it's today. All right, so it's one of the few things you can look forward to, you know. And let me go pull it up here for you. And yeah, I have it bookmarked here. All right, so the average true range, all right, is a technical analysis volatility indicator originally developed by Wilder. Okay, all right. So it is simply the range of the day's trading. Let me just highlight this so you can read it. All right. So there it is. All right. The range of a day's trading is simply the high minus the low. The true range extends to yesterday's closing price, okay, if it is outside of today's range. So see, what I need is the 459 and a half candle, whatever that is the close of yesterday. It's called the New York fix because the market doesn't stop and let them get an actual price. So there's a committee that actually fixes the price. They say, no, this Aussie is going to be worth this, all right? And the reason that's important is because bank traders, right? I shouldn't say bank traders, companies, large companies like Sony and people like that, right? They have money that they have all around the world, okay? Because they're selling product all around the world. So they sell $1 billion worth of Sony TVs that they made in yens, and they sold them to Great Britain this month, right? Well, what does that mean? We need to bring that money back so we can make another $1 billion worth of TVs, right? Send them to Switzerland. Who knows, right? So they'll go to their bank and they'll say, we will accept the price at the New York fix today. So in other words, on that would be a pound yen there. That bank knows that there's an order coming in. It knows that there's a big order coming in, and so they do what they call front running. It won't be big positions. It'll be lots of small positions so they don't alert the market that there's a big order coming in. All right, and then they're already in place, and when the order gets the billions of dollars that are going to be entered this afternoon at 5 o'clock at the New York fix, that determines how much money Sony actually took out of the market. All right, so it's so important. All right, so that's why at that time of the day you also get huge spreads. Because nobody, the bank knows that they got an order in, but nobody else does. All right. So the spreads widen, and that's why if you're in a trade, our traders typically either raise the stop to about 100 pips, or they get flat. It's just that simple. Because you could have a 20 pip stop, but if the spread goes to 30, it's going to take you out. It'll take you out because the price, because of the spread, went over your stop. All right, so that's why we don't trade at 5 o'clock. All right, but that's why it's so important. All right, and at 5 o'clock, that's when the pivot point gets set, and that's when the New York fix gets set. All right, so all that's happening in our industry, so to speak. See, so you start with the New York fix. If that's it, then and it takes off from there. That's what it is. But because it's going to be and it goes up. That will be the day chart low. All right. Now, where's the high? Wherever the ATR is. But if they do like this and put the low in down even lower and then go up, then the original target is no longer valid. It's the new low for the day. Does that make sense? Does that help you? Edward? Okay, good. All right. Last night, okay, I'll do it. Last night, the GM was 51 pip spread during that period of time. See? Look at that, 51. All right. Abdul lives in London, so it's his night. Our day, your London, his night. All right, so it's actually, I mean, it never hurts you to do the work, right, JT? So going in and doing the work is an exercise that shores up your mental acuity on what you're doing, right? But then remember, next week is Monday, will be construction day. So starting Sunday night in the Asian market, they will start the process based on their agenda, whatever that is. I don't know. Nobody knows that. On building a structure so they can trade it all week, right? So any work you do here on Friday is not for next week, right? There's nothing wrong with doing the work, right? But what's wrong is that it probably isn't valid, right? Over the weekend, because it could be a new agenda, right? See, there's a new agenda here. They broke out, right? The agenda was to keep it down. When they came up here, they did not turn it down. They broke it out. Now, what's the agenda right now? We're going sideways, right? You see that? What's the agenda? We're trying to go up. That's it. See? So the agenda is always in the charts. The job of a trader is to recognize what that is, right? So, we can do, let's do a couple charts, right? Yeah, we can do that. Somebody pick a chart or two, and I'll go through them. What do you want me to look at, JT? You asked the question. EJ, okay. My favorite currency. This is my go-to currency. All right, so we got a possible channel to the upside. I already have it for the upside. And why is this stopping going up? Because dollar is going up. See, dollar is going up. That means EJ goes the opposite. All right. So you got to remember your correlations, and this is in your on your IC. Get the IC. Everybody can have the IC. Get the IC, and you can see the correlations. Now, this means typically. That doesn't mean it always does it. All right. It just statistically speaking, the EA goes with the dollar. The dollar CAD goes with the dollar SWIFT, because the base currency is the dollar here. But like in the UJ, it's a little different color here, because why? Because although it does the yen is a very strong currency, and there are times when it will follow the yen and not the dollar. All right. So you got to know your correlations. All right. So here we go. So a possible channel to the upside on the EJ. We also got a possible rising wedge. And so I'll draw those for you. There you go. I didn't see that rising wedge. Zero, the white, so you can see it. All right. You see the rising wedge? That's a sell sign. All right. You can see that we might have a channel. All right. Like that, right? So here's what I do when I have this situation: a possible channel and a possible rising wedge. All right. So the channel says we're going up. The rising wedge says we're going down. All right. So you can see you're immediately at a standstill here. All right. So when this happens, I draw a line on this one. In fact, let me do it here. Hold on. So I on the rising wedge. All right, we got it like this. All right. So on the right one, I clone this upside line here. I create a clone, and then I drag it down here like this to the bottom. That's the support, and I change it to be very small. I just barely want to see it. All right. And why am I doing that? All right. Now I can see it. See, because that tells me where the bounce point is in case it's a channel. All right. So this could break the rising wedge, headed down, but it's not really a rising wedge to go down. It's just coming down to the bottom of the channel to continue the channel. And that's why you got to know where that line is. Does everybody understand that? All right. So now I have to decide if I was going to trade it. All right. Am I in a rising wedge? All right. Because that means there's a potential for a sell. So the only way for me to prove that is to use the three musketeers. All right. So I go over here and I go, they're still going up. Now they're trying to turn it. No, they're still going up. they're still going up, they're going down, they're trying to turn it. So it says, well, they may just want to go up here inside the wedge a little bit further before they break it out. Remember, the higher they go, the more pips to the downside. And I don't know the agenda yet. See, I don't know what it is. All right. So that would be my concern there. Yeah. If it did break, I got to make sure I have fibs on here, which I do. Are they respecting the ones I got on? They are respecting them, so I leave them alone. All right. All right. Let me take the HSI off of here right now, and you know, we'll see what happens here. And this would be a weight. This is a currency you wait on. Right? You can't trade it inside the wedge anyway, the rising wedge. You can't trade it in there anyway. Right? And when you break out, yes, you can trade that down. It's about 40 pips, all right? And it could be the very start of the greatest downturn in the history of the euro yen, for all we know. We don't know that. All right, but you could trade it on the breakout down, anticipating the target down in here. All right. So how would I do that? I would go put the ATR on it. All right. Euro yen, 102 pip ATR normally does 125 and 125. So you see that? So you know it can go 23 more pips. All right. So if you had a target, the 102 is where the ATR will be. But what if we had a target 20 pips further? You would know right now that the currency can get there. And that's why this is so valuable for you. Because if you know that and it does that, you pick up 30 pips, you know, with three lots. You know, that's a pretty good deal. It's almost 100 pips that you pick up extra just because you know that information. So what's the ATR worth? It's priceless. All right. All right. So 102 pips. Here we go. Find the 5 o'clock candle. Okay, Edward, take a look at this. Here's the 5 o'clock candle. All right. So if this is the start, we put a new high in up there. That would be the high for the day. We'd have to go up here, find the high for the day, and go down for 102 pips. 102. And we're a seller. And now we know where the target is. And now we've got the ability to define the trade. All right. Because what tells me how to trade it, the chart will always tell you how to trade it. All right. Now you can see that you got a fib about 20 pips further. So you know you should hold on for that. All right, so where's trade one? Trade one is a break hook and go right there. Trade two is the break of this support right there, and you hold for the fib on the top of it. And there's the snowman. All right, so the snowman means trade one is in the head, trade two is in the body of the snowman. 1/3 of my lots here with 3 times the stop on a 10-minute chart. All right, that's about 90, 100 pips. All right. And then trade two comes in, it is always 2/3 of your lots, okay? So always divide how much money you have to trade today. Let's say it's $100. I got $100 I can trade today. Divide that by 3, all right? And that will give you 3 mini lots, with stops at 33 1/3 pips, right? Everything being copacetic, right? So I can trade 3 minis, 3 minis of the $100 today. All right. So 1/3, 1 mini goes in here, and 2 minis go in here. The 1 mini goes up here with 3 times the stop, which in this case is 100 pips. See, but I'll never let it go back there. All right. See, what if I take the trade and all of a sudden it goes up here? Well, I'm not going to get stopped out, and then it comes back down and goes ahead and does what I want it to do. Well, then I'm still in. All right, but I don't make any money unless I get the 2/3 in. So you got, that's why you put this in first. The 2/3 goes in before you ever take the market order. All right. Because the secret to being successful in the forex is to press your winners without exception. So without exception means I never don't do that. So the only way to ensure that I don't forget it and I'll get it later. You do it now. So you place it, figure it out. Now what that forces you to do is you never make an entry unless you know the exit. Well, you starting with the exit. I know where the exit is. All right. Therefore, can I construct a trading strategy for in this area and take advantage of those wide open spaces? All right. So you can see there's a wide open space. There's a wide open space. This is not very wide. All right. So this is going to be the dangerous part in this area right in here. That's going to be the dangerous part. Well, when I get trade one on, the minute trade two goes in, right here, all right? And we hope it continues on down, all right? But as soon as that happens, that stop that's up there has got to come down here to break even. Now, I can't lose on trade one because it's break even. And as this continues to go my way, I'll move all the stops to here. Once I get the thrust of the downside right in here, I'll move my stops here. When I get close to my target, I'll move my stop tight, and it's going to depend on the size of the candle. If I have big candles like that, I'm going to hold all 3 lots for the next target for that. If I have little candles like this, right, like that, right there, then I'm going to take the 2/3 of my trade and put it in the bank. I'm going to still hold trade 1 with a stop right here in case it goes. Well, if it doesn't, well, it pops up here, right, and it takes me out. But I got all of it except 4 or 5 pips, right? But I'm willing to risk those 4 or 5 pips for an extra 20, right? Especially when I don't have to pay the spread. I've already paid the spread. So it's free money. You put it where the technical stop is, JT, on the 10-minute chart. Let's go down to the 10-minute chart. All right, so let's work it out. All right. So you get the break. All right, so right now, if we got the breakout, this would be trade 1. All right, so you get a breakout, and we got a break, hook, and go. That's trade 1. Trade 2 is coming in below here, right there. All right, so we place that trade. That's at 49. I put it at 46. Be a little bit, 3 pips away from it. All right, and 46 for the trade to the downside right there. All right, that's trade 2, goes in first. Now, while this is all doing that, you'd already got trade 2 in. Now you got to figure the stop. Well, here's my last support or resistance, all right? And I add 5 to 7 pips to it. So right up in here. So now I actually have this is my actual risk on the trade, and this is my actual reward. So you can see I can make that trade all day long. All right. It's a 1 to 5. Excuse me, 5 to 1. All right. Now, this stop, however, here, I can't leave it there. I got to go up 3 times that. So there's 1, 2, and 3. So the actual stop goes in up here. All right. Now, trade 1 comes down, trade 2 gets entered. All right. Now, it's going to depend on what it looks like here, because let's say they came down here and, they bounced for a minute or 2 right in here, bounced a little bit here, and then they finally broke through, right? That kind of thing. So this becomes the stop on the 10-minute chart plus 5 to 7 pips. See that? So trade 1 has come to break even, right? You can't lose on trade 1, and actually you have a little bit of profit here. Now you got 2, right here's your second trade right there for over here. Now, once you get through this barrier right here, all these stops get moved. This one gets moved down to there, and this one gets moved to here. Does that make sense, JT? And then as you get close to your target, then it becomes a 1-to-1 risk to reward ratio. It is recorded. We're on recording, so it'll be there later. I might break it down. I'll break it down into a smaller video for you. Just that little piece right there. There you go. Great question. Great question, JT. All right. Hopefully that helps some people right there. Anybody else? How can I chart a trade a chart on your platform and put the data in FA and at the same time keep a wand or any other button to put in the trade? Well, what most traders do, Erica, is they go buy a cheap secondhand laptop, $100. You'll have places most likely where you can do that. All right? Buy a cheap and just run their broker station and FX Synergy on that one. All right? If you can't do that, then you're going to have to do it with monitors. Now, monitors are a cheap way to go, but it means all of that information is being used up by your computer. So you got to make sure you got a zippy computer that's got solid state drives and it's got video call. Oh, we got 2 computers, right? Just put your laptop on one of them, put your broker station and your an FX Synergy. You're only going to be at that over there on a Wanda, for instance, if you're going to use a Wanda, you're only going to be there 10 seconds, 15 seconds a day. That's it. All your work is going to be on your main computer with your charts. See? And then, when you make a trade, that's what I do. I got it right beside me. I got a little laptop here. It's my wife's old laptop. And I stripped it down, got everything off it except for charts and FX Synergy. It's the only thing that's on it. That's it, nothing else. And, when I'm trading, I open that up. Right? In fact, one of our traders, he was a general contractor. And so he would always be out at the job site during the New York session. So he hooked up his truck so that he could trade from his truck when he had a few minutes, right? And he actually hooked it up so that if he got an alert on his charts, right? You put alerts on his charts. You can do that by just putting a line on here anywhere. Well, I'm going to break that line right there. And you just right click on it, and you go set alert to line right there, and you go. I want to know if and you can change this to equal to or below that line, because that means it's broken it. All right, so there we go. Notify and play a sound. Don't send me an email. All right. Now I got alert. Well, he hooked up his truck so that when that alert would go off, it would start honking his horn in his truck. So if he was up on some roof of a house he was building, he could come down and catch that move. It's kind of crazy. Yeah. So anyhow. He was actually the guy who found our initial RF1010. Right? So we used to have a trade setup called the RF1010, and he was the guy who found it. Right? And we got other traders in here. We got Larry in here. He's found a phenomenal trade. He and Randy, and we traded in fast track, and it's so good. It's unbelievably good. Right? So. Yeah, we're just a family, Erica. We're just a big family here. And I've got traders still with me since 2005. Well, actually, 2004. We had a trader in the other day, 2004. Oh, hey, John, you were in 2004, weren't you? Weren't you in 2004? When you first came around, was that you? I seem to remember that. I may be wrong, but anyway. That was John Gatwood. Anyway, Robin's not here today, but Robin's been with me since 2005. Scott, long time. JT, lots of traders. Abdul. Why would they be here? Why would they be here spending money? Because it makes them money. Plus, it's a great thing. If you're a golfer, you're going to spend more than what the charts are in the live room. I do. Yeah. The question was, didn't you and I first start the conversation in 2004? Seems to me I remember that, but I may be wrong. Oh, 2020. Okay, it wasn't you then. It must have been somebody else. Okay, thanks. All right, so there's the chart. We just worked up the chart. Anybody else have another chart you want to work up? Want to look at? Anytime. You can go and get it anytime, Erica. Whenever you're ready. Don't do it until Tuesday, because you have free access to the academy and all through Tuesday. So, take advantage and watch some more videos and, that kind of thing. Yeah. And then, when you're ready, now you can push that button. That's a button you can push. All right. Anybody want to work up another chart? Take a look at it. Anybody? Yeah. Any questions? Anybody got any more questions? GA, okay, there we go. Thank you, JT. All right, so here's the JT, all right, so now you got a big sideways market, so we can see that we can, all right, so there are two places you can put a trend on here, or actually a channel, all right? That's one, all right, is that right? And then there's the other one, all right? All right, so which one should I use? Which one should I use? The steep one or the shallow one? You have two choices, the steep one, that's right. What you're trying to accommodate is you're trying to get if you got a 45-degree angle, that's really, really important. Hold on, I'll prove it to you, show it to you. So sustainable trends are less than 45 degrees, but they're right near 45 degrees. Right? So how do I know what it is? I look at my watch. 10 to 4 is the correct degree to the downside. 8 to 2 on your watch is the correct degree to the upside. It's just slightly less than 45 degrees. Right? Anything greater than that can't be sustained. All right, so they'll run out of sellers or buyers depending on the direction really quick. All right, so we would not use this one at all. All right, all right, all right. So we wouldn't use that one because you can see the angle's not right, but we would use this one to get the 45 degree. Now, you go to make sure it's right, go over here in the right side of the charts and go auto scale. That's the real scale. All right. So if you looked on a watch, so you can see it's just a little steep here. All right. So it's not a trend. All right. We're not doing 1, 2, 3, 4, 5. See, we're not doing a wave structure. So it's not a trend. All right. And the trend is off a 240 chart. All right. So there's no 1, 2, 3, 4, 5 here. There's a 1 sideways, sideways, right? So you got 2 sideways moves here, all right? So they're not trending. All they're doing is continuation, all right? So based on this, that's the trade to the downside, all right? All right. Now MACD, what does it tell you? MACD says, yeah, by the way, you're a seller, all right? All right. Now I know I got a flag pattern here, all right? So as a flag pattern, I came in like this. Like that, and that means I'm coming out like that. So the target for the flag is the 618 right there. Right, they're usually even. Right, so let's find out where the ATR is. Right, you go to find that, and pound Aussie ATR is 125 pips. Normally does 132 and 138, so it's not far off what it normally does. You see that? This slightly short of that. Right. So what did I say it was? Hold on a minute. It's 125 pips, right? So I find the 5 o'clock candle from yesterday. Edward, pay attention here. 5 o'clock candle, 1600 right there. Right? So that's that candle right there. But the high was put in on this one right here. So I take the high right there and I go down for 125 pips. 1, 2, 5. All right, here we go. And now we see, not only is the flag the target, it's also the ATR is the exact target. So you got confluence there. So you know how to trade it. You trade it down to there, move your stop, and you hold for the 1270, which is just below it, right here. So, all right, then you watch the candles. All right, big candles, hold them all. Pick that 15 pips up with 3 lots, it's 45 extra pips. Do that. All right, and then you hold again. Small candle, put it in the bank. Big candle still, hold for that target. See? And stay in. And how do I do that? Well, I use the confirmer over here. It keeps telling me, stay in, stay in, stay in. Now, see, it's not doing it here yet because it's just starting. We still got wicks on both sides. But once you get no wicks over here, you hold on to it till you see a wick. As soon as you see a wick, move your stop. Right, because you got a greater than 50% retracement. Now, you can also see the candles are getting little, so it doesn't take very much to do greater than 50% on these kind of things. Right? So what does it mean? That means I got it all that I could get, but I'm still in case it runs. See? And learning to stay in to the targets is huge. It's huge. Right? And that's how you make hundreds of pips. Like I said, we made 315 pips this week. That's not a great week, but it's okay. All right. But in order for you to make 315 pips in a week, you're going to have to make 65 to 8 pip trades in a row without a loss. It's not possible for you to be that good. You can't. If you're that good, you can become a billionaire. Right? Good question. Okay, so that's a great question. Let me get rid of this bib here to make it clean it up a little bit. Right? Oh, I don't want to get rid of this one. I need a big one down here now. I got rid of that. I got to put it on. Click the wrong one out. There we go. They know them. They know them. Okay, they know them. I'll just make sure they know them. All right. So there will be times. Okay, let's say we got down in this area right in here, JT. All right. right there. We got nothing in here. It's a wide open space, but I still got to protect myself. All right. So my new target is the 618. If it came down here, just kept on going and going. All right. But where do I move my stop? Now I use the T30 as the mathematical reason to move my stop. All right. Does that make sense? All right. Every line you got on here, if you've proven that they use the line, that's the purpose. That's why you don't keep a line if it doesn't prove anything. But if you put a fib on it, and sure enough, it's going to that, all right? And you put the HO, put the HSI on here too. All right. Once you get a channel, you can use the HSI. All right, it's going to measure the waves. Now we know we're not doing waves, but it's still measuring the Fibonacci sequence. All right. So now you see, they know right where it is. They knew right where it was. They blew right through that, but they knew exactly where that one was. You see? All right. So they know where this one is down here. All right. So that now becomes a new target for us as if we get a trade here, we're not going to trade on Friday, but if we got here, we would move our stop at the 1,000. Where would we move it? That fib right back there. All right. We break the 1,000, headed to the ATR. We move this stop immediately to the 1,000. All right. We get down here, we look at the size of the candles, big candle, hold it, and we go hold for the 1270, move our stop right down the ATR. We're holding for the S3, all right? And they know where that is. So I know that it's a hard stop right there. It might be a hard limit. Bang, hit it, watch the candles. If you start to see them taking their trades off because they hit what their goal from up here, they hit. See? All right. So you're funny, JT. So it's all about reading the charts. And this is where most traders get it wrong because they don't want, there's no fun in reading the charts and learning to read the charts because it's all grunt work in the back. There's no excitement. The candles aren't moving, none of that. But what you have is a record, as we go in the past, you have a record of what they did and what was the information that got them to do that. All right. So this is called a forensics, by the way, but it's a great thing to do. And this is, I'm going to give you the number one thing to help your trading. Would you like to know the number one thing that'll help your trading Monday? Monday. All right. Every time you trade live in the market, at the end of the session, look at the charts, and any chart that moved and went to target or almost went to target while you were here and you didn't trade it, go back and find out why you didn't trade it. All right. What is the significance of the 1,000? Well, if you remember in your chart patterns and all that, what are Faye, if you're doing I'm going to get to your question now. If you're doing a bear flag, with a bear flag, whatever you came in, whatever the size of that pole coming in here to the bottom of the bull flag is what you're going to do from the top of the bull flag down. Right? They're going to equal each other. Same thing when you get a sideways move. Whatever it is you did coming in here is what you're coming out. Right? So why is that? Because bankers like things balanced. All right. Whatever that is what that's supposed to be. All right. So what the 1,000 is this. I'll show it to you here. Hold on. So when you put a 1,000 on, find one right here. Right. Take this one right here. So it's a fib extension. You have to have 3 places. So you have to have a structure that allows you to use 3 places. Swing low, swing high, swing low. All right. Now that's the 1,000. All right. Whatever the size of this right here is what this is going to be right here. You see it, Faye? And that's why, you see, they knew exactly where it was. And what you want to do, Faye, is you want to go do it, 300 of them, and then you go, it's amazing. It's amazing. I need to know where that 1,000 is at all times. All right? Absolutely. See? So it doesn't matter. I can go anywhere and you on any chart, and you'll see that that's the purpose of doing 300 is to prove to yourself, you know what? That's exactly what they do. All right, here's one here. Swing low, swing high, swing low. All right, 1,000 right there. See, did they know that 1,000? They knew the 1,000. 100% of that move. That's what that is right there. All right, and see, they didn't stop. They never came off that until they hit it. And then you see there, now they come down, now they come down, now they come down, now they come down. What are they coming down? To find buyers to do it again. See, this is what the market does, and we have to learn it. So that's the significance of the 1,000. Right? So that's why we look for it. Then we overlay that with what is the ATR, right? And well, no, ABC is this way, the opposite way. It'd be like this. Here's an A, B, C for that move there, right? A, B, C for that move. So there's an A1, actually a little one right there. See, do a close and reverse, right? So ABC, if you're going up, the ABC has to be going down. If you're going down, the ABC has to be going up, right? So, and the ABC is what's setting up the next move to the downside or setting up the next move to the upside. That's how everybody knows what to do. All right. So how many ABCs I got to do? 300, right? 300. Everything's 300. It's not me telling you that. It's what neuroscience has figured it out. They are the ones who say 300, not me. I just said, okay, well, now I understand it. And I can be world class in 100 hours if I'll do the work. Right? So let me pull that up here. Find it. Just give me a second. All right, it's the 100-hour rule. All right, forgot the study shows how you can become world class in 100 hours. We're going to scroll down here to where this is it right here. This is the thing. Deliberate practice, 300. Skill selection, ABCs, times 100 hours means I would be a world-class ABC, as world-class skill in recognizing ABCs. All right. All right. So how do I do that? All right. The first thing is to break down a skill into its components. All right. So doing ABCs, it has to do a move up, a move down, and a move up again, or vice versa. All right. And then it's got to set up the next move in that direction. That's what I'd be constructing. All right. That's what I need to know. I'm going to look for the 20% of components that gives 80% of the value. Okay. So the reason I'm even doing this is because I'm looking for the 80% or higher percentage that the market does. Right? If it does it less than 80%, I don't bother with trading. All of our stuff has been proven to be over 80%. Right? So that it will, if you did every single one of them, 300 of them, 80% of the time, they would work. All right? That's pretty good. All right, sequence. I need to decide which order to practice in. Okay, so the two things you need to do first are flags and pullbacks. All right, why do I want to become world class in flags and pullbacks? Because the market does flags and pullbacks every day. That's their number one things besides an ABC to continue the move. It's the number one way that they get traders to join them in the agenda. All right, so it only makes sense for me to become good at what they do every day. Right? And if I can and become world class in flags and world class in pullbacks, I can now earn what I learn. And while I learn Gartley's and Bats and Elliott Wave and all the other stuff that's around that you can learn, all right? I can learn all that, but I can earn what I learn if I'm world class. And it takes 100 hours to be world class in one thing, right? So what are the stakes? The consequences I take on if I don't follow through. If I don't do this, what am I going to do? I'm going to go back to doing what I'm doing, which isn't working. And the definition of insanity is to keep doing what you're doing and expect a different result. Right? So, yeah. All right. So world class. I can become world class if I will do the work. All right. So no better time. Monday through usually an hour and a half. We'll start at 8:30 and depends on the market. We'll go to we start at 9:30 and we'll go to 11 at least. And if the market's still rocking, we'll go to 11:30. We've been here till 12 before. If the market's giving us what we want, we stay as long as it is. But once it dies down, there's no reason to sit there and watch the paint dry on the candle. So And then we do a session recap for all of our traders around the world. And, people are sleeping while we're doing a live class every day. Right? So they're all sleeping. And so they wake up and say, wonder what they were looking at this morning in the New York room with Scott. So all I got to do is go to the session recap, watch it. And they go, oh, okay, let's see if the market still shows that. It's just a quick video. That's why it's a quick 10-minute video. That's it. So you don't spend a lot of time on it. You can fast forward to the currencies you want to trade and not even listen to the rest of them. That's the purpose. All right. So why do we do those things? We're here to try to make you successful. That's why we do those things. Here to make you successful. And this one. We're here to show you how to find these wide open spaces. These are the juicy places that you can trade. All right, you can see right here, you're doing a symmetrical triangle. All right. Do the symmetrical triangle. All right. Now, once you're in a symmetrical triangle, and you know that, first of all, it's going to explode out of here. All right. How do I learn that? I go do 300 of them and I'll know that. All right. I start at, go up here and go to chart patterns and I go to symmetrical triangles. And I read about them, right? And it'll tell me, all right, that eventually this is, I'm going to highlight it so you can read it too. All right, eventually this decision is met with resolve and usually explodes out of this formation. All right, so what does that mean? It's going to explode out. I won't get a break hook and go. See? I won't get a break hook and go on that. Oh, okay. So I have to do an entry order right there. All right, so I find the wicks here, right there, and I just get below it. Change this to white. Do that again. So there's the wick. So an entry order below there, and you can see another entry order below here. There's the target right there. All right. All right. So now I see the trade. All right. And trade one would be here, right there. Trade two would be there. There you go. See? Chart tells you how to do it. Where do I move my stop? Over the 1,000. Why would I do that? Well, here's what I know. I know two things right here. However I came into a symmetrical triangle like this is how I'm going to come out of the symmetrical triangle down here. So you can see that target's down here. That target is down here. All right. Then I can put a fib on here and find the 1,000. So let's do that. Right? So whatever this is going in, remember, whatever this equals here is where the 1,000 is going to be. So I go and put swing high, swing low, back to the top of the symmetrical triangle, swing high. The 1,000 is just below the ATR. See that? So now here's what I know. I know how to trade this with an entry order to the downside. I'm going to hold for the 1,000 below the ATR. I'm going to hold to the 1,270 right here. All right. And maybe I'll even get this and this one. We don't know. Depends on how fast it goes. All right. There we go. Trade one is here. Trade two is here. Hold, 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 hold. Maybe it'll go all the way down. I don't know. But the only one I know is the ATR is going to be the day chart. At the end of today, all the movement inside it, this is what the day chart should be. All right. That's based on its ATR, right? Because that's its average true range. And, that's why we keep track of it over all this time so that we can compare. I'm over here, there's pound Aussie, okay, 125. Well, it normally does 132, so it could go, 7 pips further, right? Then it may go, 15 pips further. But should I expect it to go 200 pips? Absolutely not. Its weekly average is only 279 directionally, so I can't expect it to do 200 pips a day. See, this is information that makes you a better trader. All right. Having the correct information allows you to, first of all, make better business decisions, and more importantly, get confidence in your ability to make those decisions. All right. See, now we're making a business decision right now. We're not trading this because it's Friday. Friday is square up day. The market makers are getting out of the market. Why would I want to get into the market when the market makers are coming out of the market? Why do they do that? Because crazy people fly planes into buildings. And so in the old days, yeah, we used to stay in over the weekend. We don't anymore. No, so there. So the position traders now, they're going to stay in, you know, but they got a big, huge account. They can handle anything that happens. You and I can't. We got a finite account. They got an unlimited account. So we can't do that. All right. Anybody else got a question? Let me play a video for you here. Hold on just a minute.
All right. Hey, tell me your name and you know how you got started in trading in forex.
Hey, Scott, Dan Simonson. I got started in forex because I met you. Actually, I was an equity trader. Worked in the industry. Worked on a trading desk, trading for other people originally, and then got into sales in the financial industry, investments. And actively traded stocks. I used to trade slams and W trades in the stock market actively, and then some other long-term trading for about the last 20 years. I day traded for about 3 years and just spun my wheels. And I didn't lose much money. I didn't make enough money to make a living. And yeah, so I found forex through actually meeting you, and I had always wanted to rekindle and trade again. And because I have a skill set, I've studied candlesticks and support and resistance and MACD basic stuff. And, but I'd had it on the shelf and was doing longer term investing. And then when I met you, took a look at forex. And so I'm new to forex, like 4 or 5 months into forex.
How long? When did you join Fast Track program?
I did the last Fast Track in the spring. What was that? Was it May or June? When did we do that thing? June. I did the June. Yeah. So
okay. And so it's September now. So you've only been in basically 90 days or so, right?
That's about right.
Yeah. So you just came off a pretty good day. Tell us about that.
Yeah. Well, I had a good night last night into the morning. I was trading some yen crosses, Aussie yen and New Zealand yen. I trade those pairs together sometimes. And then did a pound yen trade, and I think I had 380 pips on the pound yen last night, and like 180 in the Aussie yen and 120 on the New Zealand yen. So it was a good night.
So what's your opinion of Fast Track? And we name it that so that it does do exactly what you're doing, which is fast track you.
Well, for me, Fast Track is helping me do a couple things. It's helped me break bad habits that I had because I had been trading. And I'm still really working on those. It's helped me identify what those are. And then I can focus on kind of breaking them and really helping me with risk management. I'm a guy that will pull the trigger. Fast Track is teaching me to wait for my better opportunities. And so that's a big thing for me, having some experience. I think another thing, what the training has shown me, Scott, is because I've placed thousands of trades in the equity markets over the years, and there were things I was sensing and feeling, but I just didn't have education for. I was finding things that now I know what to call them. But I didn't have someone to help me understand what they are. And I didn't have the discipline to start actually doing statistical probabilities or tracking things so I could be more confident. And so Fast Track's given me a lot. I mean, I could talk longer than we want to go on the training, but it's filled gaps for me. And it's helping me focus and helping me with risk management a lot.
So if there's somebody in the room right now who might be on the fence and thinking, I don't know if Fast Track's for me, maybe I should, maybe I shouldn't, what would you tell them?
Well, I would tell them that I've wanted to be a full-time trader for 20 years, and I've spun my wheels and I've used my skills to make long-term investment decisions, and I've made good money in the markets over the years. But I believe I'm going to be a full-time trader in the spring, or if not sooner. Like getting into forex was new. I had to learn the language of forex. I had to learn the differences between the equity markets and forex. I really am enjoying it a lot. But the tools that I'm being given here, I lost some money at first, but I followed your advice, and I just am trading for statistics and trading for so I've used a small account. And I'm trading for pips and statistical success. like you teach, 65% win ratio and, an average pip capture that's solid. And my pip capture is getting way up right now. And my statistics are getting better. I think maybe by the end of the month, I might have doubled my account for the first time. I can tell you, I was trading much bigger money in stocks. I was trading 40, 50 grand all the time. On margin, I might be doing 100, 150 grand in a day on margin, but I never doubled my account, never. And I'm close to doubling this with trading and the forex, and that will be a new achievement for me. And I'm close. So I would say for me, it's the best thing I've done. I'm glad I jumped in with both feet. I would spend the money. I've been through training classes in the past for stocks and other things. And this is far and away the best financial market training I've ever had by a long shot. And so I would jump right in. I would go fast track. I wouldn't wait. I would dig in, and I just give yourself some months or a year commitment to learn, just like you say. And, I'm having epiphanies every month. And, I think that it's going to create a lot of success. So I wouldn't hesitate for anybody. And I think you're a really good teacher, Scott. You're making me better at my job when I teach. Thanks for everything, Scott. Appreciate you.
All righty, there you go. So that's from a fast tracker. You've seen Dan in here all week. Right there, Abdul's here. It's fast tracker too. So All right. Any more questions? If not, we'll close it up. We're going about an hour and 40 minutes or so here. So, like to keep them manageable so they're easy to go back over if you're going to watch the video again. So we will be here Monday. Don't forget, it'll be another Q&A like today because the market's not going to do anything. It's a U.S. holiday, bank holiday. So the banks aren't open. So you just forget about Monday being a good day to trade, but it'll be a good day to learn something. And Tuesday, of course, we'll be back to normal. Then next Wednesday, Thursday, Friday, there will be no New York session because I will be in with fast trackers for 3 days in the morning. All right. So there you go. Everybody good? All right, fantastic.